Hello everyone, good morning. So today we are going to start with the corporate training. Our schedule will be the same as mentioned by Manushi. Like on every Saturday we will have individual taxation and on Sundays we will have the corporate taxation. So let me share my screen and we will start. Just a minute. Okay. So before starting with the today's session, I would like to explain few things, few rules rather, I would say. First one is this whole training will be based on 2023 laws. Okay. Second thing is no sessions should be missed by you guys, even if you miss any single lecture. It's just 8 days. Okay, only 8 Sundays you have to give your time in the training, morning 2 hours each. Okay, so even if you miss any single session and if you expect that no, I'll watch the recording and then I'll come to the next session, that is not going to happen. Even if we provide you the recording, you are not going to watch the recorded sessions that I have experienced since previous two batch. And then the remaining days you will find difficult to understand the concept. Okay, because every topic, I don't know about individuals, but for corporate, each and every topic are linked, interlinked to the previous day's session. Okay, so make sure to attend it mandatorily on each and every Sunday whenever we are having the sessions. Constant 8 Sundays you have to give for the corporate training. When I say 2023 law, there are so many changes regarding the tax rates and some figures, some amounts and everything. So we will be covering the amended 23 laws. Okay, second thing is, like, third thing, I will be giving you some recorded videos to clear your theory knowledge. See, if you see that in 8 days you cannot be thorough with the whole corporate taxation. These 8 days are specifically for the practical training. But what about the theory, like how the basis calculation is done for a partner in a partnership firm, how the like kind exchange theory is there, what is installment sale, each and every topic, it is exactly enrolled agent part 2 theory we will be giving you. Like for corporate taxation, I will be giving it to you, the theory part also. So in individuals, the theory part is exactly similar to what you will do it in the practical sessions. But for our part two, it's a very lengthy course actually. Okay, part two is all about three forms, that is 1120S, 1120 and 1065. So you should not only punch the numbers in the Drake software, you should also know the logic behind it. So we will be giving you uh am I audible, guys? Everyone? Okay, Satvik, Shiva, am I audible to you guys? Okay, Brighty, I think you should adjust some volume or something. Maybe due to some network error, I won't be audible for you. Okay, so this three forms, actually, you need to understand the theory as well. Okay, I have seen this in our first practical session. Some people were totally fresher in this industry. Okay, so if I start teaching you how to prepare the work papers and how to enter it in the Drake software, it will be simply a data entry, right? So due to this thing should not happen again, I will be giving you some theory videos also, the recorded videos. It will be in the Google Classroom. Okay, make sure to watch that theory during the whole week. You have Monday to Friday, during whole week at least 2 or 3 videos you can go through and come to the Sunday session. Our 8 day schedule will be such that the first 2 days will be theory portion plus explanation of each and every line item of the forms. Okay, then 2 days we are going to start with the 1120 S corp return. Then 2 days we will start with the 1065 and then 1120. And on the last day, we will be taking a Q&A session. Okay, so even if you miss any single session, your single form will be totally missed, right? And this time I am telling it upfront, no recordings will be provided for the practical preparation. I'll give you the theory videos that will be enough for understanding the concept, but for practical written preparation, this 3 days you will not be given any videos. So if you're going to miss any session, please inform me earlier only, because we have only 4 people in the corporate training, so I want to keep it a little bit personalized. Each and every students should have proper understanding of what I am teaching. If you are going to miss, let's say Shiva and Sathik, you both are not going to attend the session, earlier only you can let me know, okay? Or Maggie or Brighty, any one of you are going to miss the session, please let me know at the earlier, before the starting of the session. Okay, got it, guys? So let's start with the today's session. First session is just understanding the types of entities. Okay, I know many of you have already worked in the US taxation, or might have already known about the types of entity. But today, first, we are going to start with the details of what are the types of entities. Okay, there can be a sole proprietor. Just a minute. Okay. There can be a sole proprietor, there can be a general partnership, there can be a limited liability partnership, limited partnership, LLC, corporation, or subchapter S. Now, you would have thought that we have just heard about the 3 types of entities: S corp, C corp, and partnership. The US taxation is not limited only to this 3 type of entity. We have some more categories in the partnership, more categories in the S corp and the LLC. Okay, like how this formation has been done. First of all the entities are been listed as a LLC, limited liability corporation. Okay, limited liability company. Now they have to decide, so this formation is done at a state level. Now they have to decide at federal level. This federal level recognition is not there for LLC. This is just a state level formation which is done at the level, okay, for the entity. Got it? Now this limited liability company will then be recognized at a federal level, either as a partnership, or as a S corp, or as a C corp. Okay, the decision will be in the hands of this LLC, what treatment they want to have at the federal level. Okay, if they have not elected any treatment, and if there is only single person, only one person is there, they will be called as disregarded entity, or I can say as a sole proprietor at a federal level. And which form they will be using? Simply a 1040 form. Okay, the owner will file a simple 1040 form with a schedule C, business income or expenses, right? But if there is more than one person, or the owner, means 2 or more person are there, they will be by default they will be called as a 1065 partnership partnership firm. Okay, so now what if they want to elect S corp or want to elect as a C corp? These two are the default. Just a minute, guys. These two are the default recognition by the federal level. That is, individual disregarded. If one person, 2 or more person are there, they will be by default called as a partnership. Okay, but what if they don't want to register themselves as a partnership? They will go for a S corporation or a C corporation. To get themselves elected, they will have to file a election form. Okay, they can either select as a S corp or C corp by filing a separate election form. Got it, guys? So first one is sole proprietor. Sole proprietor, the formation is not required. The owner simply owns his own business, and this you will learn in the 1040. Okay, and this time it's a good thing, like we are doing the individual taxation and corporate taxation parallelly, okay, on Saturdays and Sundays. So on in 1040 you will see that schedule C will be the form, will be the schedule which will be used to report all the incomes and expenses. Okay, no formation requirement is required, only it will be operated as a simple single owner business. Okay, the liability will be unlimited because the person himself will be owning the whole business, so all the liabilities he will be personally liable for that. Management will be done by the sole owner. Transferability, okay, means what? If they want to transfer their whole business to another person, they will have to sell the business at the will. In other all scenarios, we will see that how the selling will be done. They will need a unanimous consent or not. All that thing we will see in the types of partnership and types of corporation. First, S corp is clear for everyone. Taxation is simple, like flow through taxation. Flow through means what? They will individually pay the taxes on their own. Okay, sole proprietor is the very simplest form of entity. Second one is general partnership and limited liability partnership, and the third one is limited partnership. So there is a very minute difference between all of the three partnership, and understanding this difference is important. Why? When you will see the 1065 return, there is a recourse and non-recourse liability. Okay, let me make you explain this thing. In case of partnership, we have three. Generally, there are two only: general partnership and limited partnership. But here, there is a very minute difference between limited liability and limited partnership. And here we have is general partnership. Okay, see, general partnership is where all partners are general partners. What do you mean by general partners? They will have unlimited liabilities. Okay, and here only one partner is general, like minimum you will have to have minimum one partner as a general partner who will be having unlimited liability, and rest all can be limited partners. Limited partners means what? Whatever contribution they have bought in the business, only up to that much amount they will be liable. So that is a limited. Their liability will be limited only to the amount of contribution. Okay, so first we will understand this two from that chart, and then we'll come to the limited liability partnership. Okay, in case of general partnership and in case of limited partnership, when you will receive a K1 from schedule K. Now, what are these two things? Anyone who is new to these two words, schedule K and K1? Anyone who doesn't know at all about these two? Okay, so everyone has heard about this word schedule K and K1. This is nothing but when a partnership or S corp passes through the income, expenses, losses, deductible, non-deductible expenses, non-taxable, every income and expenses will be carried to a schedule K. Okay, and then based on the number of partners or shareholders, it will be allocated to them based on the percentage. and they will receive an individual K1. Okay, so when they receive a K1, they will also receive one more thing, that is shareholders basis worksheet. Basis worksheet is generated in the software. Okay, so what is this basis worksheet? Here your tax basis, at risk basis is being calculated. What is at risk basis, guys? It is nothing but till what amount you are at risk when you are in this partnership firm. Means till what amount you are personally liable for any debt. Okay, means this unlimited liability of a general partner, when he is going to be a personally liable, okay, there is a recourse debt, then it will increase the at risk basis. Tax basis is simple, whatever contribution the person has brought into the business, okay, plus non-recourse basis plus recourse basis, like all the debts plus all the contributions plus all the current year profit, right, minus any losses plus any tax exempt income minus any non-deductible expenses at the partnership level or the S corp level. Okay, so the summing up all these things is my tax basis, but at risk means only up to the amount where you will be personally liable. Okay, I'll just quickly explain the difference between recourse and non-recourse. It's very simple. Recourse means there is no security attached to the liability. Okay, recourse means no security attached to liability. For example, I have sold some goods to Mr. X. Mr. X has promised to pay me after 30 days. But there is, guys, my voice is properly audible now. There is internet issue. Okay. If he has not given any security, okay, against that goods, means he is going to pay me in future, but there is no security to that payment, so that is a recourse liability for Mr. X. Okay, he needs to pay it, but there is no security attached to it. Second thing is non-recourse. I'll take one example. We have purchased a property, for example. That property purchased is on mortgage. Now, what do you mean by mortgage? Mortgage is attached with that loan, and that mortgage is the land or property which we have purchased. So there is some security attached with it. It is known as non-recourse liability. Any security which is not attached means it will be personally the issuer of the loan. Okay, the person can come to Mr. X, and Mr. X will be personally liable for his debt. In case of non-recourse, the person will not be personally liable. First, the mortgage property will be sold and recovered from that amount. After that, the person will be then personally liable. Okay, there is one more thing which you will see is qualified non-recourse. Okay, now qualified non-recourse is nothing but there is a security, but the security is a real estate. Okay, if a security is anything other than real estate property, then it is a non-recourse. Security is a real estate property, then it is a qualified non-recourse. Okay, simple. I was just explaining the meaning of types of partnership. One is general, one is limited. If there is a recourse loan, the general partner will be totally liable for it. If there is a non-recourse loan, it will be allocated between the limited partners and general partners in the ratio of their profit sharing or whatever they have agreed in the agreement. Clear, guys? Till now, is there any question? We will be reading this theory. After that, if you have any question, please let me know. You can unmute yourself and ask, or you can just put it down in the chat box. So first one is general partnership or a joint venture. There is no formality for formation. See, even if it's not legally documented, then also it's fine. So no formalities. It can be formed by a verbal or a written agreement or a mere conduct. The liability will be unlimited. Okay, and all the partners will be personally liable for the liabilities which are taken by the partnership firm. Clear, guys? Owners will manage the day-to-day operations directly or can agree to appoint a managing partner. Now there will be one difference between this management in case of general and in case of limited. Limited, what it is happening, only the general partner will be managing the whole day-to-day business. Limited partner will not be involved in the ordinary operations of the business. Clear, guys? So when you see in practical return, when you see one person is a general partner, another is a limited partner, and if you find that the limited partner is receiving salary, is that possible that the limited partner is receiving salary? The answer is no. Why? Because limited partner is not going to work at all in the day-to-day operations. Only the general partner will be working in the day-to-day operations. So this kind of small things are actually related to the basic concepts. Okay, whenever you find this kind of situations, you need to jot it down in the open points, that okay, we have considered the salary, but my observation is, being a limited partner, he has received a salary. So please confirm, is it related to this limited partner or a general partner, or has he changed his nature of ownership from limited to general? Okay, these are the small observations from our basic concepts. Next is um, transferability. Yeah, the partner cannot transfer the ownership interest without the unanimous consent. Okay, unanimous consent means all the partners should 100% agree to transfer the ownership. This happens in case of general partnership only. Why? Because the partners are personally liable for the liabilities. That's why the decision will be taken unanimously by all the partners for selling the interest to some other person. Let's say there are three partners, A, B, and C. Okay, A wants to sell his partnership interest. He wants to, sell his, let's say, 50% of interest to Mr. X. Okay, so if all the three people are agreeing for this proposition, then only Mr. X will be entered into partnership. Okay, in limited partnership, what will happen, guys? Partners, whether general or limited, cannot transfer without unanimous consent. Even if you're a limited partner or a general partner, you need to take a unanimous consent. Okay, got it, guys? Last one is taxation. Both are flow through entities. Okay, both will be a flow through entity. Means what? All your incomes will be passed through into your 1040 return of a partner. Let's say A, B, C. All three are individual persons. They will file their 1040 return. So you will see in the 1040 also that they are going to receive a K1 from a partnership firm, and this K1 will be included in their 1040 return. Clear, guys? This is about limited partnership and general partnership. Limited partnership also, like, formalities are they have to file a certificate of limited partnership with the state. Okay, in general partnership they don't have to file anything, but for limited partnership you need to file a certificate of the formation with this state. In whatever state you are been formed, you need to file it with them. two types of owners will be there. One will be general and one will be limited. Management, we have already seen, exclusively general partner will manage the business. Okay, now let's come to the limited liability partnership. This is a combination of general partnership and limited partnership. How? While forming the business as a LLP. Okay, you might have heard this. Some businesses use the word LLP at the end of their name. Okay, now what is exactly that? When this formation is done, they need to file a statement of qualification with the state. Okay, statement of qualification means they are eligible to be formed as a LLP. The liabilities of the owner will be a little bit different than general partner and limited partnership. How it is? Partners are generally not liable for the partnership obligation unless caused by their own negligence. Okay, means in general partnership, what was the situation? They were personally liable. In limited partnership, what was the situation? They were liable, but only up to the amount of their contribution. Only means it's only limited to their contribution. Okay. Limited liability means what? They are neither personally liable, neither limited to the contribution. If any liability is formed due to their action, let's say Mr. A is bringing into the firm an equipment. That equipment he brought through a personal loan, so he will be personally liable for that loan. The other partners are not responsible at all for the loan. If he is not able to repay the loan for the equipment brought in the business, he will be personally liable. Even if it is the loan amount is more than the contribution, he will be liable for personally repaying that. Okay, got it, guys? So that is a difference between a thin line of difference between the general partner, limited liability partnership, and the limited partner. Okay, now regarding the management, they can manage, all can manage together the operations of the business. So partners manage directly or can agree to appoint a managing partner. Okay, same way, this transferability condition is same in all the three. They cannot transfer it without unanimous consent, and it's also a flow through entity. Okay, it's also a flow through entity. Next is, okay, next one is limited liability company. Before moving to the LLC and corporation, anyone is having any question in this partnership, basics of partnership? Anyone? Okay, so I'll just add on one more thing. 1065 will be the form which we will be filing with the partnership returns. The due date will be simple, 15th of March. Okay, and then as soon as the return is filed, the partners will receive a K1. They will file a 1040 return on 15th of April. Okay, you might have seen that in the previous session. So 15th April is for 1040. So just before 1 month of the due date of that partner's return, means that is 15th March, you need to issue the K1s to the partners. Okay, now extension due date is exactly same as that of partners due date, that is 6 months. You will get 6 more months to file the return. That will be 15th of September. Okay, if the partnership return has been extended, okay, but the partner doesn't want to extend their filing date, they can file it on 15th April, and later on when they receive the K1, they'll have to again amend the 1040 return and include that K1 as an income portion in their 1040. Okay, but usually what they will do is, as soon as the partnership firm extends the due date, they will also extend the due date. Okay, so that dual filing requirement is not required by the partner. They'll have to first file the 1040, again file the 1040x, the amended return, to include the K1 receipt. Okay, now one more thing is there, like which you can see in the practical life. If there are any changes, any XYZ changes in your partnership return, okay, you can amend the 1065 return. Okay, vice versa, you need to amend the 1040 as well. Okay, if there is any changes in your 1065 return, you need to amend your partner's return as well. So if your client is giving you work to amend the 1065 return, you should also inform him, or at least ask him, that we need to amend the 1040 as well or not. Okay, got it, guys? I hope this much is clear. So next one is limited liability company and corporation and S corporation. Okay, so these two corporation will have some similar laws, except one law. S corporation will be a pass through entity. Just like a partnership, all the income will flow through the 1040 return. Same way for the S corporation, all the income will flow through their shareholders through schedule K1. Okay, now first let's understand what is LLC. Okay, LLC is formed at a state level and they will file a article of organization. Corporation, as the word suggests, it's a corporation. They will file a article of incorporation or a corporate charter with the state. Okay, so LLC and C Corp both will have to file the article of organization and article of incorporation with the state level. One more entity was there, they need to file it with the state level, that is LLP. Okay, so if your business is a LLP or it's a C Corp or it's a LLC, you need to file the physical statement with the state level to form your company. Okay, also in case of limited partnership, there is simply a certificate. It's just a certificate that you are eligible to file a limited partnership. Who will be eligible? There has to be minimum one general partner. Okay, the eligibility is minimum one general partner. If they don't have any general partner, they cannot form a limited partnership. Okay, they'll have to shift to the LLP. Got it, guys? Next is, in case of LLC, what is the liabilities of owner? It is not personally liable beyond their investment. So whatever is their adjusted basis, okay, up to that adjusted basis means what? Whatever contribution they are bringing business, plus every year be adding the profit share into it, minus any distributions. So that is the adjusted basis. Okay, after adding and reducing the contributions and distribution, this is simply your partner's capital, I can say. Up to that much only they are liable. Okay, now in case of LLC, members can themselves work or they can appoint a separate manager. Transferability in this case, if there is no agreement. Okay, in absence of agreement, members cannot transfer it without unanimous consent. But if they have written it down in the agreement only, in the article of organization, they have written it down the way of transferring the ownership, that will be followed. If nothing is mentioned, you have to take the unanimous consent of each and everyone. Okay, same way, LLC will also be a flow through entity, but members not managing have passive loss restriction. Okay, so I'll first explain what do you mean by this. This is there in case of LLP, in case of LLP, in case of limited partnership, and in case of LLC. General partner, it will always be a flow through entity which will be providing the K1, and each and every partner will receive the K1. That ordinary income they will include as an income. But for LLP, limited partnership, and LLC, this three type of entity, if you are not actively involved in the business, who will not be actively involved in case of LLP? Those who are not conducting, like not involved in day-to-day operations. Limited partnership, limited partner, I can say, right? They are not allowed active involvement of the operations. LLC, those are agreed not to themselves. So these people will have the income or losses which they receive in schedule K1 called as a passive income or passive losses. Clear, guys, this much? Okay, just understand the meaning right now. We will do it practically. If a person is receiving K1, okay, in K1 we have each and every categories, all the income, expense, deduction, everything is listed over there. K1 line 1 simply says ordinary business income. Okay, let me show you that thing in case of 1060. When you look at the schedule K, this one, ordinary business income or losses. Okay, in schedule K of 1065, this is your ordinary business income and losses. So this will be considered as a active income for the person. This will be considered as an active income for those who are actively involved in the conduct of business. This will be considered as a passive income for those who are not actively in the conduct of business. The example is in case of limited liability partnership. What are those persons? Those who do not involve themselves in the day-to-day operations. Okay, limited partnerships or limited partners, they are not allowed in the active conduct of business. And LLC means those who have agreed not to involve themselves. Okay, so you might have seen this thing in practical life. Sometime we considered schedule K1 as an active income. Sometime we considered it as a passive income. Okay, this bifurcation is important. Why? Because whenever you have a ordinary income, this you will see in the 1040 only. 1040 ordinary income, and if you have a ordinary loss, it can offset against the ordinary income. But if you have a passive loss, let's say the person is having a passive loss over here. Okay, he's not involved into day-to-day activities, but there is a loss. So the portion which he's receiving is his passive loss. This cannot offset against ordinary. This will offset against passive income only. What are the examples of passive income? Dividend, interest, royalties, rental activities. Okay, so these are the passive incomes. Against this only your passive loss will be offset. Okay, coming back to our normal point. So here it is mentioning is flow through taxation, but partners not managing have passive loss restriction. This means simply the thing which I've explained right now. Their income and losses will be called as a passive, and passive loss restriction means that loss can offset against passive income only, not against any other income. Okay, so in case of LLC, it is clear. For corporation, what is the simple thing? You need to simply file an article of incorporation. You are incorporating a business or a corporate charter. Corporate charter means what? Where you are mentioning it to the IRS that this will be our authorized share number of shares. Okay, authorized number of share means total, let's say 10,000 number of shares they are going to issue during the lifetime. So their authorized number of shares should be mentioned to the IRS, that is charter. Okay, corporate charter will be given to the state, like in which state they are formed, they'll have to file it with them. Okay, shareholders will not be personally liable beyond their investment. You might have seen, like, whatever investment you have made in the shares and securities of any corporation, only up to that much amount you will be liable. Means at the time of shutdown of a corporation, you will be at risk only for what amount, how much you have invested in that company, not more than that. Okay, now who will manage the corporation? The board of directors. They will appoint some officers to run the day-to-day business. Okay, and in case of transferability, it's freely transferable. See, through stock exchange you can easily sell your shares and securities or buy any new shares and securities, so it is freely transferable. There is no restrictions on it. Last one is income is taxed at a corporate level at flat 21%. This percentage has not changed in 2023 also. It is still same as 21%. Okay. Second thing is, once the corporation pays the tax at 21%, and if they want to give the dividends, they want to distribute some income to the shareholder, they will again be liable for a dividend tax in their 1040 return. So in 1040 you will see one document, that is 1099 DIV. This is nothing but when the individual person receives a dividend income, they'll have to issue it. Corporation will issue the DIV to the individuals, and individual will include it in their 1040 return as an income. Okay, and this income is called as a passive income. Why passive income? All the shareholders are not personally involved in day-to-day business. See, if you buy the shares of BHEL, okay, or any RVNL or Geo Finance or any XYZ company, I'm talking about India. You are not going there and working in the day-to-day business. You have just invested your money. Your money is generating money for you. So that is a passive income. That's why DIV which you will receive is also a passive income. Got it, guys? And the last one is subchapter S corporation. That is nothing but a small business entity which is formed with a very minimal number of members. Less than 100 members are allowed in case of S corporation. Okay, it's a small entity, small qualified business entity, and they will have to follow the same rules as a corporations. With an addition, they will have to file a S election. Okay, along with the formation of LLC, they can either form as a C corp or S corp by filing the form, S election form. Okay, so shareholder generally not personally liable beyond their investments. So same way as a corporation, it will follow same things will be there. In case of management of the business, they will appoint a officer to run the day-to-day business. Okay, now shareholders generally may transfer the ownership unless agree otherwise, but cannot transfer the ownership to foreign entity or a non-resident, because there is a criteria that S corporation can be formed only for less than 100 members, plus each and every member should be a US citizen. So if you're sitting in India or in any other country, and if you want to form a business in US, it is very easy. You don't have to opt for S corp. Okay, you can only go for a C corp or a partnership form. Okay, got it, guys? Not even sole proprietor. You cannot form as a sole proprietor because it will require SSN to incorporate your sole proprietor. Like, no need to incorporate it, but you'll have to file a 1040 return. Okay, then you need to take a ITIN if you don't have a SSN. So best option we advise to the client, if they are a non-resident, non-US citizen, they can go for a C corp formation. Okay, clear, guys? And the last one is, it's also a flow through entity, but shareholders not managing have the passive loss restrictions. As I mentioned, if they are not actively involved in the business, all the ordinary income and expenses which they are receiving in the form of K1 is their passive income and expense or losses, not their active income and losses. Clear, guys? Any question in the business entities, type of business entities, or if you find anything which is, having a question from your practical life in your mind, anything? Okay. So I hope this much entity type is clear. Now, today I will be coming to each and every forms. 2023 form we are going to take. There is no as such difference in 22 and 23 forms. Okay, I'll start with 1120S first, and then I'll move to the 1065, which is much similar to 1120S. Okay, see, the basic things we already know, that anyone is there in this batch who has not prepared a single corporate return, either in practical life or either in the mock returns, not prepare a single return. Okay, so everyone is little bit familiar with this form. This form we are going to do for 2023 tax return for S corporation. The first few line items are regarding the basic details of the organization, the name of the entity, the address of the entity. Okay, this is the basic details. On the left hand side you will see that there are some dates. Okay, the dates which are mentioned regarding the S election effective date. Now what happened is, okay, no worries, we will take it in detail only. What happens is, S election effective date can be from cannot be equal to date of formation, or can be equal to the date of formation. Means this date of incorporation and S election effective date can be different also. It can happen initially you form your business as a C corp. Okay, let's say on 1/1/2017 you formed your business as a C corp. You were filing a C corp return for quite 2 years, or let's say 3 years, and then you shifted to S corporation because the quantity of business has reduced, number of members are less than 100, there is no foreign involved, person involved in your business and anything. So you decided to shift yourself as a C corp. So date when you elected as a S corp, then that date will be your effective date of election. Okay. Now you'll get confused, like till what time we need to elect for the S corporation, right? From the date of formation, they'll give you 60 days to select as a S corp. If you do not elect as an S corp, you will be called as a, by default as a partnership, or by default as a single member LLC, disregarded entity. Okay, but let's say you elected within 60 days and formed as an S corp. Due to some breach of rules and regulation, your S corp election has been terminated. Okay, so for next 5 years you cannot re-elect as an S corporation. You have to wait for 5 years, then again you can elect as an S corp. This termination can be voluntary also, or involuntary. Voluntary means using the unanimous consent of each and every members. Okay, so always remember, this S corp election date and the incorporation date cannot be same, or it can be same also, since day one you have elected yourself as a S corporation. Okay, now let's say 15th March is the due date. Before this, if you elected as your S corporation, okay, your S corporation effective election will be from 1st of Jan. After 15 March, if you elect as a S corporation, your effective date of election will be 1st of Jan of next year, let's say 23 year, but after 15th March of 23 you elected it, it will be 1st of Jan 2024. Okay, these all are the theoretical concepts. That's fine. I'll give you some material and lectures to go through the basic concepts. Right now, let's understand each and every line items of the form numbers so that it's easy when we start it in the Drake software. When we prepare it in the Drake software, I'm not going to again explain each and every line items. Make sure you listen it carefully, note down some queries and ask me later on this. B option, it is saying as the business code. Register a anyone who has done the incorporation of any S corp, C corp, or a partnership. Anyone? Okay, no worries. So see, when you incorporate it now, you have to first decide what is the business activity of that corporation. Okay, then you have to check it in the IRS table. There's a whole table of codes given by the IRS that if you are doing, let's say, involved in the real estate business, if you are involved in manufacturing business, in services, in professional business, so each and every business activity has a unique code. That code you have to mention it over here, and that has to be the same as you mentioned in your EIN and in the EIN letter. EIN letter means when you form a business, okay, all the basic information, once you give it to the IRS, they will issue a EIN number. Same way as an SSN in 1040 return, it's an identity number for that individual person. Here, it's a employer identification number, which will be used to uniquely identify the number of uniquely identify the return. Okay, so these four are clear. Next one is total asset. You need to mention in column F. Every year this keeps on changing. Total number of asset that should exactly match with your schedule L. Schedule L is your balance sheet as per the books. Okay, so you will see that the total asset should match with this. Okay, 15th line, 15th. Next is, if you have, here I'll just add one more point. If you have less than 2,50,000 of asset, okay, or gross receipts are less than 250,000, you don't have to file schedule L and M1, M2. Okay, M1 and M2 will come to it specifically. We will have one session, like next session will be just on M1 and M2 reconciliation. Once you crack this code, how to reconcile M1 and M2, rest all thing will be easy. Okay, so simply remember that either M1 will apply or M3 will apply. M3 means what? If your business is going on a higher level. Okay, if the gross receipts or your assets are more than a specified limit, then you need to go for a M3 reconciliation. Okay, this M3 reconciliation is exactly same as M1 reconciliation, but the only difference is in M3 you will have a lot of line items. Each and every income is mentioned separately, expenses is mentioned separately, and you have to mention the difference between book and tax income, book expenses and tax expenses. Okay, we'll see that M3 we will have a little bit of overview of M3 also later on. In the corporation electing, if is the corporation electing to be S corp beginning with this tax year, see, let's say if they are filing it for the first year and from the first year they want to elect as an S corp, they can elect here as a yes. Okay, H column is important. By mistake you should not tick any of this column unless and until there is some changes, some amendments in the address, name changes there. If it's a final return, means you're liquidating your S corporation and you're transferring it to some new organization, or you are terminating your S election, or you are amending the return, you just need to elect here as yes. Okay, here you will see in 1040 1040x will be generated. In case of corporate returns, X will not be generated. You have to check the box number H. If this is a amended return, here the tick mark will be there in your fourth column. Here they'll not write it as X over here. Okay, for amended return. Enter the number of shareholders who were shareholder during the part of the tax year. Even for the part of the year, if you're a shareholder, you have to write it down over here. One more thing I'll add over here is, let's say you have 3 shareholders that were there in your organization till March. After April, out of this 3, only 1 shareholder is there. So during the whole year, whatever profit you have earned, it will be allocated between 3 shareholder for 3 months, 3 by 12, and the remaining profit will be allocated to only 1 shareholder for the remaining 9 months. Clear, guys? This will happen only in case of S corporation. In S corporation, the profit is attributable on a day-wise manner. Each and every day, the profit is getting accumulated in their account. So even if you are a shareholder for 1 day, your profit will be attributable for 1 day. You will receive a K1, which will have 1 by 365 times of the profit attributable to you. Got it, guys? So this you need to remember. That's why the number of shareholders which they have mentioned over here is during the any part of the year. Okay. Now, next one is J. J is mentioning, check if the corporation has aggregated activities for 465 at-risk purpose, group activities for section 469 passive activity purpose. At-risk and passive. At-risk means their investment is at risk. Only that much amount they have invested in the business. Total investment they are at risk, and they are actively involved in the business. If they are not actively involved in the business, the whole activity is a passive activity. One example I'll say is, everyone has accumulated the amount and invested into number of shares. They are just receiving a dividend income, interest income. They are just involved in the rental activity. They have purchased one investment property and they are earning the rental income. So this is a group activity which is a passive purpose, which is formed for the passive purpose. So you are going to select here as a group passive activity. Clear, guys? Now this all things we will see in the practical manner, like all the incomes minus all the deductions will be your ordinary business income. Why I'm saying is ordinary, guys? Ordinary business income means your day-to-day activities. From that, whatever you are earning is your ordinary business income or losses. Those income which is related to dividend will not be mentioned over here. Can you guys see here? There is no line item for dividend income, for interest income, rental income. Capital gains is also not there over here. Okay, so anything which is indirectly earned by the organization will straight away go to your Schedule K. Okay, can you see your Schedule K, shareholders pro rata share item? Okay, so this will be shown as a separately. See, rental income, other gross rental income, expenses from rental activities. So income minus expenses net of these rental business activities will be shown over here. Interest income, dividend income, royalties, short-term capital gain, long-term capital gain. Okay, collectibles. These are the items of artworks who are eligible for the highest tax rate of 28%. Okay, long-term and short-term will be liable for 0%, 15%, sorry, only long-term. Only long-term will be liable for 0%, 15%, and 20% tax rate. Now, how this tax rate will be identified? Based on the individual slab rate. I am not sure, like yesterday you might have seen the slab rates. Like if your taxable income is falling between the two figures, you need to pay this much tax. Okay, the slab rate are the concept followed in US taxation. So if you're falling in 0 to 15% category, you need to pay 0% tax on your long-term capital gain. If you're falling between 15% to 20% category, you need to pay flat 15% tax on the LTCG, and any tax which is going more than 20 up to 37, the highest tax rate is 37%. So maximum you have to pay only 20% tax on the long-term capital gain. The same preferential, this is called as preferential rates, lower rate as compared to your normal tax rate. Okay, so this individual limit is applicable on your 1040 return. That is why the long term, that is why the long term capital gain will be shown as a separately on your as an income in your schedule K. Okay, same way like for dividend, there is a qualified dividend. Qualified dividend also same tax rates are applicable. Ordinary dividend, if you have received, see, if S corporation is holding some investment into shares and securities, so can I say that investment is a passive activity? You're just holding the investment, you're earning the passive income on it, right? So all the passive related incomes will be shown on individual tax return. Can anyone tell me what can be one of the reason for showing it separately? Anyone? Those who have already worked in practical life or who have already gone through some theory portion. Priyanshi, Satik, anyone? Why this we show it separately? It's one and the same thing. Now, see, your ordinary income is getting carried forward. This line 22 is getting carried forward over here. Then we add all income, reduce all deductions, take some credits. Ultimately, it is having the same effect. So why only this portion, incomes, expenses, credits, these are shown separately on schedule K? Anyone? Any guesses? Just a normal, knowledge I want. Like, till now, what have you guys understood till now lecture? Not directly related to business income. Yes, that we know. It is not related to directly business, but why to show it separately? Ultimately, this ordinary income is also going to be allocated between partners. This all incomes are also going to be allocated between partners. Right now, only I have explained that the preferential rates will apply at individual level only. These rates are not applicable on the corporate returns. Corporate returns, see, S Corp is never going to pay any taxes. So for S Corp, there is no slab rates allowed, right? So always remember, where anything which is going to have a individual limit, you will see in the 1040 return when you go through these sessions like on Saturdays, you will see that charitable contribution have an individual limit in the 1040 return. In S corporation, there is no such limit, right? 170 deduction will have a individual limit in the 1040 return. It is deductible straight away on individual return. Same way charitable contribution. Okay, so all these things which will have impact on 1040 return will always be shown separately. Some limits are applicable on it. Same way I'll talk about short-term capital gain. Here it is taxed at an ordinary rate only. Okay, it's not taxed at 0, 15, 20%. Then why we are including it separately? The reason is, if you have a short-term loss, it can offset against ordinary income. Why? We are applying the ordinary tax rate when there is a gain. And when there is a loss, it should be offset against ordinary income only, not against passive. So ordinary income, you will see that individual person might have received W2, might have some business income, right? So these are the ordinary income where he is actively involved in the business. right? So this thing you need to remember while preparing the tax return. Also, we will see that when we prepare the work papers, we need to do a tax grouping. Tax grouping means you are allocating whether this expense is related to the ordinary income or whether it's related to Schedule K item. Okay, so this is the first page of your 1040 return. Individual lines I'm not explaining. We will do it practically when we see it in the mock returns. With the numbers, with the figures, I'll able to explain you well. Okay. After you add all the incomes and reduce all the expenses, you will get an amount which on which you need to take some more deductions. Okay, the first one is excess net passive income or LIFO recapture tax. Now this will happen. The LIFO recapture tax will come in the scenario when you are converting your C corp to S corp, or you're converting accrual basis to cash basis accounting method. Okay, LIFO recapture means is nothing but if you have the inventory valuation as per FIFO and inventory valuation as per LIFO, the difference between these two needs to be recaptured. Means you have valued your inventory as a LIFO till now. Okay, it was allowed as a LIFO if you're using a inventory valuation. If you're using a accrual method, then LIFO was used by the organization, that's fine. But now you're converting your method to the cash method. The difference between the LIFO and FIFO valuation, we don't have to get into the calculation part. It will be done by the a specific software, or there will be different work papers, but we are not going to cover this calculation. Okay, I'll just tell you the concept. LIFO was allowed in accrual, but when you convert yourself as a cash method, then you need to recapture. Means if excess inventory valuation you might have taken, see, if excess inventory valuation you might have taken, your COGS would be affected indirectly, right? So to reverse that thing, recapture means you are going to add it back. Always remember this word, meaning of this word. Recapture means you are recapturing the tax, means you are making it taxable again. Earlier it was deducted, now you are making it taxable again. That is recapture tax, LIFO tax. Same way there will be some property transactions where we will again see this word, there is a recapture of depreciation. Okay, so let's just complete quickly this part. 23A is regarding any passive income. Okay, excess net passive income or LIFO recapture will be added back, and tax on schedule D form 1120S means now from here your tax portion will start. Whatever extra taxes you might have to pay will be added over here for calculating your tax. Not directly related. Okay, I thought there is one question in the chat box. No worries. So here all your taxes related portion will start. 24A point, it is mentioning as current year's estimated tax payment and preceding year's overpayment credit to the current year. Now you will have one question in mind. S Corp is not paying the taxes. How they will pay the estimated tax? The answer is yes, they can pay the estimated tax. The S corporation or partnership, they can pay the estimated tax. That much portion will get reduced from their total tax liability. And this will again be allocated to the individual return. Okay, so don't worry about the practical portion. We will do it properly. Right now I know you will not able to understand this portion. When it is auto calculated by the software, we will do it at that time. Okay, I'll explain it one by one, the last portion at that time, right? Next is schedule B, which is most important. Usually people in practical life, what they do, they look at the previous year return and answer each and every questions on schedule B. that is other information. But actually this is most important if there are some changes in the entity. Okay, you need to identify what is the accounting method used by the S corporation, whether it's a cash, accrual, or any other will have a hybrid method. Okay, or cash method or accrual method. You need to identify the business activity and the product or services, means whether they are selling some product or whether they are selling some services. Business activity means like let's say their activity is selling and purchasing. Okay, or their activity is manufacturing activity, or they're involved in real estate. So every activity needs to be mentioned here properly, and which should match with your business activity code, which is mentioned on the first page. Okay, third point is at any time during the tax year, just a minute. At any time during the tax year, was any shareholder of the corporation disregarded entity, trust, or an estate, or a nominee or a similar person? If yes, we'll have to attach one more schedule, that is B1. Means S corporation will have less than 100 members. Within that members, the member should not be a C corp or any other partnership, but they can be a disregarded entity. Means being a schedule C, you can purchase the membership in S corporation in the name of the business if it's a sole proprietor. If it's a partnership, no, partnership cannot be a member of S corp. C corp cannot be a member of S corp. Foreign entity cannot be a member of S corp, but a estate or a trust can be a member of S corporation. Okay, so if the trust, estate, are or a disregarded entity are member, you need to file a schedule B1. Schedule B1 is simple, like it's just an information, basic details, like if you have a EIN number. Trust and estate and disregarded entity might have EIN number, you have to mention it over there. Okay, the reason is it's a very detailed reason, I'll just tell you. If this person are providing some services to S corporation, and S corporation is paying something as a fees or any amount to this people, okay, who are already a member, S corp will not issue a 1099 to them. Okay, what do you mean by 1099? 1099 is something MISC or NEC. Okay, it is issued to the vendors who provide product or services, and those people are going to receive the income from them. Okay, so they, being their own entity, being their own trust or estate, they are the members of the S corp. They will not get a 1099 issued in exchange of provision of services to the S corporation. Okay, got it, guys? At the end of the tax year, did the corporation have any of these two things? If yes, then you need to mention the details. It's simply saying that are you owning 20% or more directly or indirectly, or 50% of more of the total stock in any foreign domestic corporation? If, see, now here you will get confused, it is not allowed. No, it is allowed. People can't hold in S corporation being a foreign entity, but S corp can hold at least certain percentage in the foreign corporation, right? Got it? So S corporation, if they are owning more than 20% directly, indirectly, or more than 50% directly, indirectly of any foreign or domestic corporation, okay, then they have to mention the name of corporation, EIN of this corporation, the country in which it is located, how much percentage you are owning, and if in this case the percentage in this fourth point is more than 100%, then you need to just enter the date. Why? Because from that date, this entity will be called as a subchapter S corporation, means subsidiary of S corp. Subsidiary of a S corp, subchapter S corporation, they will be called as. Okay, as soon as it goes to 100%. Clear, guys? This is this is owned directly or indirectly. Now here it is having interest of 20%. Okay, directly or indirectly, an interest of 50%. Here they are mentioning the total number of stock. Total number of stock here they are mentioning as a interest. Interest means in any profit distribution or any asset distribution, the corporation will, S corporation will have an interest of 20% or more than 50%. Then they will have to mention it over here. Okay, and how much percentage of profit or capital they are involved in that foreign corporation, you will have to mention it. Okay, the second side of a coin is allowed, but this thing is not allowed. Foreign person can't hold it in the S corp, but vice versa is allowed. Okay, clear guys, this one schedule B. Next few questions are very easy. At the end of the year, did the corporation have any outstanding shares, restricted stock? Those who have done the theory portion for part 1 and part 2, like EA, I think Priyanshi has done it. So you might have remember what is restricted stock. If you give some stock, shares and security to your employees, and let's say if 3 years are vested on it, means till 3 years you cannot sell that security, that is your restricted stock. Okay, so if you have any outstanding shares of restricted stock, if you have received some restricted stock, you need to mention yes or no. Ideally it's always no, but if there is an yes, you need to mention the number of stock and the value of the non-restricted stock. Restricted plus non-restricted both needs to be mentioned separately. Okay, now B option is saying is at the end of the tax year, did the corporation have any outstanding stock option, warrants or similar instrument? So these two are similar, restricted stock, or if you have a stock option, means you might have received the option to buy these shares and securities at some minimal price as compared to the FMV. If you have this kind of scenario in your S corporation, you need to mention the total shares of stock outstanding at the end of the tax year and total shares of stock outstanding if all instruments were executed. Even if it's executed, you have to mention. Even if it's not executed, you have to mention both the things. Okay, and the third one is for B option, it is clear guys, it is restricted stock and securities, and it is regarding the outstanding stock option. Okay, sixth one is, has the corporation filed or is required to file 8918? 8918 is nothing but a disclosure statement for any reportable transaction. If you have to report the transaction, some foreign transaction, see now some of the points will be straight away related to foreign corporation, like foreign transactions only. So if you have to report it to the IRS, to the foreign transaction related forms, okay, 547172, if you're going to report it, you need to mention it yes or no. Okay, then we have is check this box if corporation issues publicly offered debt instrument with original issue discount. OID is very clear that the face value of the stock shares. Okay, you might have issued the debt instrument. I'm not talking about the shares. S corporation cannot issue the stock, shares, securities. They will issue the debt instrument, and if it is issued to the public, okay, and at a OID. OID is what? The face value is $10, but you are giving them option to buy it at $5. So the original issue discount is something which is less than the, the purchase price will be less than the face value. Okay, so this thing, if you have issued, you need to just check mark the box. Okay, if it is check mark, you need to file a form 8281, which is related to the publicly offered OID. Right? If the corporation was earlier a C corporation and now elected to be a S corporation, so the biggest concept, like the biggest thing which comes here is BIG, that is built-in gain. Okay, when it was a C corporation, all the asset will get transferred to S corporation on the date of S corp election. So the date which the assets are getting transferred, on that date, the FMV might be more than the value of the asset. Okay. So the difference between the FMV and the asset value is known as built-in gain. At the time of transfer, you are not going to recognize any of this gain, but when this S corporation is going to sell some of the asset which was acquired when it was a C corporation, that much portion will be allocated as a built-in gain. Okay, so that why is it's mentioning that if the C corporation before like if the S corporation was a C corp before it elected as a S corp, or the corporation acquired an asset with a basis determined by reference to the basis in the asset in the hands of C corporation and has unrealized built-in gain. Okay, then you have to mention that how much is the net recognized built-in gain minus total unrealized. Okay, unrealized means your FMB minus asset value. Now total built-in gain is this. Out of this, let's say you have sold some asset in current year, you will recognize that much portion in current year. So the current year recognized figure will be reduced, the remaining is still your unrealized built-in gain. You have to mention here how much it is. Okay, so in practical life, I know most of the people have done the copy paste of the prior year's tax return. It is not like that. You need to check each and every ledgers and financials before answering this yes and no amount questions. Sorry. Okay, because sometimes you need to mention the amounts also. Sometimes if you directly blindly select as yes or blindly select as no, and then the IRS finds that no, there is a some foreign transactions and this entity is holding 50% or 20% in the foreign organization, they will straight away send you a notice along with the penalties just because this answer was incorrectly answered. Okay, so the next one is 163J is simply means business interest deduction. So IRS has allowed interest deduction only up to your business interest income. So what it is saying that have we elected 163J for any real property trade or business? Okay, if you have purchased some real property or a farming business for your normal business or for your farming business, and you are paying the interest expense against that, are you earning some interest income? Okay, business interest, it should be business interest income. Let's say you're all having a farming business, you're selling some products at a installment sale and you're receiving some interest income. So that interest income is from active conduct of business, so that is your active interest income. Okay, you need to set off your business interest expense against that. Up to that much amount only it will be allowed, that is 163J. There is some more calculation, we will see it in the Drake software by doing some permutation combination, and we will see how much is actually allowed by the software. Okay, next is, does the corporation satisfy one or more of the following conditions? What are those conditions? Corporation owns a pass-through entity with current or prior carryover excess business interest expense. Okay, means business interest, as I mentioned, expense is allowed only to the extent of business interest income. Any excess, okay, any excess will get carried forward in the future years indefinitely. Now, is the corporation having any of this carry forward in current year? Okay, that you need to answer. And second, it is mentioning the corporation's aggregate average annual gross receipts for 3 tax years are more than $29 million or not. Okay, for 2023 you can remember it is 29 million. Till now it was $27 million. You need to check the average annual gross receipts of previous 3 years. Okay, whether it is 29 million or not. If yes, then only this 63J limitation will apply. That is, interest expenses limited to interest income. If it is less than this, then this business interest limitation will not apply. Simply you can take the whole interest expense as expense. Okay, got it, guys? Now the last C point is saying that corporation is tax shelter and corporation as a business interest expense. If a corporation is formed as a tax shelter means using all the advantages of the IRS law, they are saving the taxes. Within the law only, they are saving the taxes. They are not doing tax evasion. It's just a tax planning, tax strategies. So if it is just formed as a tax shelter, they will have to attach form 8990 for mentioning the limitations of 163G. If it's a tax shelter, you will not look at the $29 million limit. By default, interest expense will be limited to the interest income only. Clear, guys? The 11th point it is mentioning is, does the corporation satisfy both the following? What are it? 250,000 are the total receipts up to this much amount, or if the total assets are also up to this much amount, no need to file schedule L and M1. Okay, so this is regarding the schedule B. Few more points are left. I'll just quickly complete it. One is, during the tax year, did the corporation have any non-shareholder debt that was cancelled, forgiven? Because this kind of cancelled debt are the considered as the income of the corporation. That's why if it's a non-shareholder debt, why non-shareholder debt, guys? If it is a debt from third party, then it is called as a non-shareholder debt. Okay. Next one is, if yes, you need to mention the amount also. During the tax year, was qualified subchapter S subsidiary election terminated or revoked? Means their S corporation election was terminated or not, you have to mention it over here. Or if this S corp is a subsidiary of some other S corporation, this is a holding company, this is a subsidiary company. Okay, and if this S corps, the holding companies, S election is revoked, by default, this election is also revoked. Okay, means subchapter S subsidiary is terminated. This is called as a qualified subchapter S subsidiary. It is terminated by default because of the holding company has terminated its S election. Okay. Did the S corporation made any payments in 23 that would require to file form 1099? Okay, as I mentioned, 1099 forms are issued by the payer to the person who is going to receive the income. Okay, who is going to receive the income? Vendors are there. Okay, those who provide the certain list of services, for them you will be issuing 1099 MISC or NEC. Okay, if the expense is more than $600. Got it, guys? This much, I hope this much is clear. Next is, if yes, whether you have properly issued then the 1099, you have to mention that. And the last 2 points are related to the qualified opportunity fund. And the last one is, at any time during the tax year, did the corporation receives and as a reward, award, any property they have received, or they have sold or exchanged any digital asset? This is regarding the digital asset, and this is regarding the qualified opportunity fund. Certified, if they are certified as a qualified opportunity fund, they have to file the 8996. Okay, so this much detail you will not find in the practical life, but reading each and every line of the schedule B is important. Once you prepare your first page, income and expense, then go for schedule B and then check out your schedule K. Okay, in practically, when we'll do it in the Drake software, you will understand it very well. And this time the mocks are a little bit different. In previous two batch, the mocks were of very high level. Actually, people were not able to solve it even in the homework. So that's why this time I have kept it very simple mocks to understand the concept, how the interview will be flowing. Okay. Schedule L is nothing but your balance sheet, and M1 and M2. M1 is book to tax, net income, reco, and M2 is your retained earning reconciliation. Okay, clear, guys? So this is about 1120 S corporation. In our next class, we are going to start with the 1120S practical only. See, how the days, actually I mentioned 2 days for theory, but instead of that, not wasting the time in class, I'll give you the theory lectures in homework. I'll be having the day 1 as 1120S theory. Okay, for 1120S, I'll give you theory lectures which you can go through from Monday to Friday. Okay, there may be 3 or 4 lectures only. Day 2, when we meet on the next weekend on Sunday, we will have a practical mock of 1120S, where we will understand the M1, M2 reconciliation properly with the numbers and figures. Just explaining you this will not be enough. If you understand how to put on the figures, it will be easy. Then day 3, we will do the partnership proper theory, like what all things are important, the whole 1065 form. Okay, line by line we will do it. Day 4, okay, before day 4 there you will have 1 week. Okay, Monday to Friday, I'll give you 1065 theory lectures. Actually, how to calculate the partnership basis, liquidating distribution, non-liquidating distribution. Those who are preparing for EA exams, that will be useful for them also. Okay, so for specifically for corporation, it's a huge, calculation portion. That much you can understand in theory concept from Monday to Friday, and from on day 4 we will see 1065 mock return. Same way, day 5 I will take 1120 theory, give you the 1120 theory video, and day 6 we will do 1120 mock return. Okay, and when we come to day 7 and day 8, before that, I will give you 5 mocks for 1120S and 1065, and 3 mocks for 1120. Day 7, we will solve some of the complex part of this mock, and day 8, we will have the doubt solving session. Okay, so this is my pre-planned 8 days training. I know the syllabus which was sent to you was a little bit different, but I think that this is the best. When I have seen the previous two, like I have taken the previous 2 batch, I have seen the people are still finding it difficult to understand the concept. So involving the theory was important for me. Okay, for our part 2 corporate returns. Clear, guys? You will get all the notes and video links and everything over your email. I'll just need Brighty, your email ID in the chat box. If you can share it to me in personal, it would be great. Margi's email ID I have. Priyanshi, Satik's, everyone email ID I have. Brighty, please share your email ID in the chat box. Okay, so today we'll keep the session short and simple till over here only. Go through the theory only. Focus on only 1120S this week. Don't look here and there for partnership or any other portion. Just go through 1120S. I'll share you the videos also. Okay. Brighty, can you please share me your email ID? Okay, Brighty has left the meeting. No worries. We'll meet again on next weekend, Sunday. Have a great weekend and do study the theory as well. Bye. Have a good day.
Thanks. Bye-bye.